So we find ourselves on day 2 of the new normal. The White House has redefined recession to avoid uncomfortable headlines. And even Wikipedia's fallen in line and updated its page on recession, locking it from future amendments. And the reasoning given by the Federal Reserve is that payroll growth is still strong. But it's worth remembering that all 3 recessions in the 1970s started with positive payroll growth. The problem the US is facing is similar to the 1970s in that positive nominal growth is unable to overtake inflation. But despite the rate hike and negative Q2 GDP, risk assets like Bitcoin rallied. We think that's because the Fed has lost credibility with the market, who have tuned out and are now focusing solely on data, not sound bites. And if we take a look at the bond markets, we can see that they're starting to price in a Fed policy pivot. And that's because when you combine recession and high inflation, you get stagflation. In June, we reported on comments from Bridgewater Associates founder, the legendary investor Ray Dalio, who said that stagflation would force a Fed pivot. Well, it looks like that's where we're heading. Strap in because September could get interesting.